Hi everybody, my name is Kevin Sandlin. I am the Chief Marketing Officer for FINSYNC. In this video, we're going to walk you through everything you should need to know to apply for and get and expend your SBA Payroll Protection Program loan. Here's what we're going to walk through today. First of all, what is it? And a few things that you really need to know that aren't really in the guidelines. Who is eligible for the PPP or Payroll Protection Program loan? What can you use those funds for when you get them? How much can you borrow and how do you figure that out? What are you going to need to apply when you fill out the application? Because this is a government application, so you're going to need a lot of very specific things. Some part of the loans are forgivable. How much is that and how do you figure that out? And then what else do you need to know? So here's where we're going to start. What is it? First of all, a couple things you really need to know about this loan. You can only fill out one application at a time. This is very important because it would be very tempting to go to this bank and that bank and that bank and start applications just to see who could get you done first. Don't do that. You can't do that. One application at a time. And the reason you have to do that is because you have to see that application through to the end, either funded or denied, before you can start another application. You can only have one active application at a time. The SBA is monitoring this. The easiest way to do this would be to start at your bank. So if you have a checking account or a loan outstanding at any bank, then call them first. Now, you may find what we're hearing here is that if you don't have both a checking account and an outstanding loan or line of credit with the bank, they may not accept you as your application. That's up to the bank. So you need to find out first. Second, if they don't have an online application, if you can't literally fill it out in your browser on your computer, then you need to ask them to call FINSYNC. We have an application for them that they can use on their front end to get electronic applications in the door. Or you can go to finsync.com and fill out your application right there, and we'll find the best bank for you. Either way works. We're just trying to make sure you have the best tools available for you. Next thing you need to know is once you get these loans, you have 6 months before you have to make any payments. So it's truly trying to free up cash within your business. So if you get a loan sometime in April, you don't have to start making payments on it, any payments on it until October. Next, the interest rate is 1%. Incredibly low, very, very generous interest rate for any small business who gets these loans, 1%. There are no fees on the loan and there's no collateral required to get the loan. So what is this whole thing? Well, it was part of the CARES Act, which was passed by the Senate, passed by the House, signed by the President, all within about 10 days. Really, really fast. Well, that's great, except for when the government moves that fast, it's very unusual. So all the banks are now sitting on this program, and they weren't prepared, no bank was prepared to take on this kind of volume. So we're still kind of feeling out what that's gonna look like. But as part of the CARES Act, there's $349 billion set aside for small businesses. Now we're going to talk about that definition here shortly, but it's specifically for small businesses. And the purpose of it is to help these small businesses stay afloat, keep their employees, and pay some overhead, meaning rent and utilities. So one of the big parts of this is that the loans are forgivable. So if you follow some very specific but very, very clear and simple guidelines, you don't have to pay these loans back. That's a big deal. So pay attention here. We're going to walk through all of that. Who is eligible for the Payroll Protection Program? Small businesses. What does that mean? It means a business from 1 to 500 employees. Got some other definitions in there, but one of the most important ones is that a business of one, a sole proprietor, an independent contractor, or someone who's self-employed, that's a small business. You are eligible for these loans to make your payroll to yourself. Next, 501c3 nonprofits, less than 500 employees are eligible. Tribal business concerns that meet the SBA standard for that size, those are eligible. And veterans organizations, 501c19 veterans organizations that meet the SBA size standard are eligible. So it's generally small business. What can you use the loan for? Very specifically, there are 4 things: payroll, mortgage or rent, utilities, and interest on other loans. So first, payroll. Everything that goes into your payroll. So when you do your payroll, whatever it is, a month or for 2 weeks or whatever, your salaries and wages, health insurance, paid sick leave, or medical and insurance premiums, all that is considered payroll. So that's what you can use this loan for. Next, pay your mortgage or pay your rent. Wherever your business operates, you can pay that with these loans. Keep the lights on, pay your utilities, your water, your heat, your air conditioning, whatever your utilities are in your business that you need to keep on, you can pay those with this loan. And finally, if you have other outstanding loans, you can pay the interest on those loans. Not the payment themselves, not any principal, but you can pay the interest on those loans to keep them up to date. How much can I borrow? How much can you borrow? How much can we borrow? 2.5 times your average monthly payroll cost, up to $10 million. And if you took out an economic injury disaster loan from the same package earlier this year, between February 15th, 2020 and June 30th, 2020, which is yet to come, you can refinance that loan under the PPP at a 1% interest rate, making it very, very affordable. Both of those will count towards that maximum of $10 million. So again, 2.5 times your average monthly payroll, plus you can refinance your EIDL loan if you need to. How do you figure out how much you can borrow? You got two choices. One, you can take the last 12 months of payroll. That would be April 1st of 2019 through March 31st of 2020. Or you can take calendar year 2019 payroll. All of those months. You figure out the average monthly payroll cost and multiply that times 2.5. The reason they're doing that is because this is meant to cover about 2 months or so of your payroll to keep people on your payroll to keep your business open. There's one exception, and that's that people who make over $100,000 a year, you got to pretend that they're making $100,000 a year. So that's one adjustment you'll make to your average payroll cost. So it's going to go down a little bit, depending on how many people have making over $100,000 a year. We have built a calculator for you. So you can go download the Excel spreadsheet that we've created for you at finsync.com/SBA. That's FINSYNC, FINSYNC.com/SBA. We've got a calculator for you. It's a simple Excel spreadsheet. Download that, put in your numbers, and it'll come out with the cost. What information do you need to apply for the PPP loan? Keep in mind, first of all, that this is a government loan, so they're going to require lots of paperwork. Your I's have to be dotted, your T's have to be crossed. For corporations, LLCs, and partnerships, here's what you're going to need. A full year of 2019 payroll tax reports, including IRS Forms 940 and 941, including documents that are sufficient to determine which employees exceed the payroll limit of $100,000. That's for corporations, LLCs, and partnerships. For independent contractors, you need a full year of 2019 IRS Forms 1099 or 1096 for 1099 employees. For sole proprietors, you need your personal tax returns from 2019, and you have to include Schedule C. Now, these are your 2019 tax returns. That was delayed, so tax day got moved from April 15th to July 15th. You got to get your tax returns done for 2019 before you can do this. For everybody who's applying, you need from 2019, you need your statement of healthcare benefits, including your insurance premiums that you paid, your statement of retirement benefits paid, and your statement of income and unemployment tax filings. Those are all from 2019. You have to have all that before you can apply. You're going to need your driver's license or your other government ID, and anybody who owns 20% of the company has to be a U.S. citizen or have permanent lawful status. So there's some other stipulations for anyone who owns 20% or more of the company, so you have to be prepared to answer those. How much of this PPP loan is forgivable? In other words, how much do you not have to pay back? The good news is all of it, if you meet these pretty simple criteria. First of all is when you are applying, the day you apply, however many people you employ, you have to keep those people, keep that same number of people. Second, you have to maintain or have to pay at least 75% of these loans you have to use for payroll expenses. You have to use at least 75% of the loan on payroll expenses. And third, you have to make these expenditures for payroll expenses within the next 8 weeks after you get your loan. Those are three pretty simple criteria. One, maintain the number of jobs you have when you apply. Two, spend at least 75% on payroll. And three, spend it within the next 8 weeks. The whole program was designed to keep small businesses afloat for 2 or so months. That's why all this 2.5 months and 8 weeks, 2 months is coming up. Finally, everything you need to know, including a downloadable version of this guide, is at finsync.com/SBA. We are here for you. If you can't get an online application, go to finsync.com, fill out our online application, or if you're a bank, we'll set you up with your own online application. And if your bank doesn't have their own online application, tell them to call us. We'll set them up. Thank you very much. Godspeed. Hope you do well.